And I believe this is what's happening with institutional money right now in the crypto area. So what will happen is, due to like risk management, they'll hit a certain percentage and they'll take profits. Even though while they're going to pump the cryptos or pump the stock, they'll take profits on their way up just for risk management. Welcome back, YouTube. So I've been getting a lot of questions about Dogecoin and AMC and like the recent drop with Dogecoin and what's going on as far as with the short squeeze for AMC. So I'm just going to do an update like I normally do pertaining to both, because there's a lot of FUD going on, and I also want to provide some understanding for what part of the cycle that we're in right now with Dogecoin. So to get things started, just to provide clarification, we are still here around the institutional money part. And the reason I know this is because A, there hasn't been a significant rally after that big push that we saw, and B, it's happening simultaneously over the market. Now, as we know, the Bitcoin controls the market, and the market pretty much follows not an identical pattern, but typically either up when Bitcoin's up and down when it's down. So if Bitcoin's red, typically other cryptos are red, and if it's green, typically other cryptos are green. And as of right now, we're seeing, I wouldn't call it a crypto crash, but we're seeing a downtrend right now. That's how I know that we're still in the institutional phase, because we didn't get that the big push, and technically the push that would require FOMO to kick in would have to be a lot higher than the push that we saw recently. So what we're seeing right now, and this is just my opinion, by all means do your own due diligence, but what we're seeing right now with the institutional money is, well, let me answer this. So first and foremost, when you see the entire crypto market go up and down at the same time, that is typically done by computers. So this is technically computer trading or computer buying, and this was how you'll see, even in the stock market, you'll see a lot of stocks do like an identical pattern. This is typically done by computers with like set positions or set percentages that they'll take profits on. And I believe this is what's happening with institutional money right now in the crypto area. So what will happen is, due to like risk management, they'll hit a certain percentage and they'll take profits. Even though while they're going to pump the cryptos or pump the stock, they'll take profits on their way up just for risk management. Why do that? So typically, if I'm a whale, or if I know I'm controlling the coin or the stock, I can take profits pretty much whenever I want. But what I want to do is have that big push from the floor and push up and have some people come in behind me because they see the stock is rallying. What I'm going to do is I'm going to use them as my floor and take a little bit of profit from the current point where I stop pumping it at, and take a little bit of profit, use them as a floor, and then buy back in. I do with crypto, and what I recommend is always coming in after, before the institutional money. So when the institutional money pulls out and we see that correction or a crash altogether, that's typically when I recommend going into crypto. So right now we could consolidate some more, depending as far as like how much profit they take. But I believe that you shouldn't buy anything just because it's going up. So if you're long on Dogecoin or Bitcoin or any of the other coins that are down right now, typically you want to look for these periods to enter, because after they take profits or have their certain percentages, they're going to buy back in, and then we're going to push the stock up some more. Of course, when we start hitting those close to like those all-time highs, or it starts trending enough as far as like in the media, that's when you'll see the FOMO, and then we'll hit another boom as far as for going up, and the cycle repeats itself. Personally, I have no issues with Dogecoin and what I see what's going on. I don't believe it's anything to do with that scam in like Turkey or something like that. It has nothing to do with it. I saw a lot of questions about that. All of them are correcting together. So this is all part of the cycle. And I like what I'm seeing right now. After the corrections and you see like a typical pullback across the market, those are usually always good entry points, especially if you're long. Traders, institutions, they're going to take profits on the way up to mitigate their losses. They're not just simply going to jump into any investment and put like $1 trillion into it and send it, vertical. Like, that doesn't make sense for them. And it also gives them a lot of risk as far as like on their end. If there were to be like some new regulation or some type of bad news that was out of their control and caused like the retail to pull out, it just pretty much makes them take an unnecessary risk. So they'll take profits on the way up. This isn't the last time we're going to see this. They'll do it again, just as they've always done. So I've been seeing also a lot of stuff as far as for AMC and what's going on, saying that, oh, the squeeze has happened and the squeeze is over, so everyone should sell. The squeeze has not happened. And as far as for why we're getting in, or why I know the squeeze hasn't happened, let's talk about some of the facts that we know. Adam Aron said that we own about 80% of the float. 80% of 513 million is roughly around 410 million. 400,000, and increasing because we're still buying. Institutions own about 144 million per SEC filing, and also when Adam Aron made that statement, that's also being filed with the SEC. So technically speaking, these are facts per the SEC. So that the total float, as we know now, is 513 million. But if we do the math of us owning 80% of the float plus what the institutions say they own, we end up with 554 million. Which means, as far as for, if you've seen the reports, as far as for, oh, is there synthetic shares? Well, based off of what's being reported to the SEC alone, and not doing any of the background research or any of the due diligence as far as for how the price is being pushed down mathematically, we'll see that there are at least 41 million shares that are unaccounted for in the float. And we also know that they have shorted, I believe it's a lot more, but they have shorted 100 million shares. A shorted share has a guaranteed buyer. So typically the wider the spread in the opposite direction from where you start shorting at, that's going to determine the wider amount of money that you're losing. So that's why you'll see, like earlier this week, they'll be like, oh, short sellers lost like $1 billion in this one day. That's because it had a really strong rally in the opposite direction. And I believe that there are a lot of options that are expiring this week. So they're going to short like hell to get the stock down so that those options below $40, so that those options don't expire in the money. There isn't a squeeze until the shorts cover, not before. So when you have pretty much over 100% of the float technically being loaned out or simply being held, that puts a restriction as far as for on the amount of shorts or the amount of shares that are out there so that they can buy back in and cover those positions. That's typically how this squeeze will happen. As of right now, as long as they're being able to borrow shares and manipulate the market, they have been able to, as far as take profits, as far as like with making sure the options don't expire in the money. And also if the SEC if they're not going to come in and do like any of the regulation, we're going to see them continue to manipulate the market. I do believe that the SEC is investigating and that we are going to see some, pretty much see the hammer brought down relatively soon here. But just to address the FUD, the squeeze has not happened based off of the short interest and the shorts not being covered, and also based off of the facts that we know that they are at least 41 million synthetic shares. I hope that this video provided some clarity. Dogecoin is completely normal. It's operating in the cycle, hasn't deviated the course at all. AMC is still being extremely manipulated, but at the end of the day, shorts must cover, and if they don't, this will cause catastrophic damage to the stock market. So that's why I believe that they're not going to, well, at least the government is not going to allow this to go on for much longer, because it'll pretty much create a lot of attention in the stock market, saying that the stock market is rigged, which we already kind of know it is. But they need us to invest in the stock market for the economy's sake. So that's why I believe as this goes on longer, this will become more and more apparent, and they'll be forced to step in even if they don't want to. If you'd like to follow me on social media, please do so. I have all the links in the description section of the video. Don't forget to like and leave a comment. Let me know your thoughts. And as always, I appreciate you. Thank you. And until next time.